Welcome to Portfolio Reflections for August. Now, you'll be pleased to know for the August reporting season, your fund has returned over 4%. And what a month it's been, with some of the highest volatility stocks taking place in the top 20 companies. Now, remember we've been talking about and leveraging into more allocation into cyclical sectors in the last few months, and that has really paid off. The top performing sector were consumer discretionary. The retailers are doing better on rate cuts and also on improving consumer confidence. Most of the trading update has been very, very pleasing. Now, our pragmatism towards the resources company also have done well, particularly some of the heavily shorted space such as lithium continue to rally, and most of the iron ore miners continue to hold up very, very firmly. Now, interest rate beneficiaries like the REITs continue to be one of the top performers, and then the financials, the banks, hasn't done too badly. Now, of course, within the banks, you have the cheaper banks done much better than the likes of CBA, given the valuation rotation. Now, the worst performing sector this month, surprisingly, is actually healthcare. Out of the healthcare space, the best performing, I would say, is ResMed, which we do hold one of the core holding for your portfolio. That has reported very strong numbers and continue to grow very well in the US. Now, the disappointment within the healthcare, which we don't have much position in, which is CSL, has reported a very disappointing result, and also the likes of Sonic Healthcare that we do have an underweight position in. So net, the reporting season has been very, very strong for us. Now, let's talk through some of our winners. Zip, that we have been talking about for quite some time, then continue to track really well there in the US, performing way above people's expectations, and Australian businesses continue to track very, very well. Share price has rallied over 30%, making it one of the big contributors for the portfolio. Now, our next one is 360. Of course, we've been supporting this company for quite some time, and yet it just reported another very, very strong result. Share price up significantly as well. Now, there's another name we want to talk to that we haven't really speak much about, which is Cuscal. Reported really great numbers. It's a little payments company that we participate in the IPO late last year, and share price has since performed incredibly strongly and again rallied over 24% on result day. A2 and Seek continue to be very strong driver of the return. In case of Seek, we think that this is just the beginning of the multi-year upgrade cycle for the job board business. Now, on the short side that we often don't talk about, that has done well for us this month as well. ASX is one of the short position we quite recently initiated, has delivered good return for our investors. So ASX is one of those most expensive defensives that we have often stayed away from. And more recently, given the rally in the share price combined with some of the operational challenges, we saw immediate downside for the share price, given how expensive it is. Since we initiated the short position, then the share price has fallen when the company gave profit warning on high costs due to the regulatory issues. So that has performed well for us. On the other side of the ledger, of course, we have a few disappointments. Domino Pizza, we recently initiated positions given the sharp fall in the share price, waiting for the turnaround to come through. Unfortunately, did report a slightly disappointing outcome. So the trading update was in the negative 0.9% instead of positive, and we saw the share price down meaningfully. Now, we're a bit surprised that the investors were looking for a turnaround in such short space of time for a company actually delivering pretty steady earnings. And now with the focus on purely profitability, our view is that share price has been unfairly sold, and it provides a great buying opportunity. It is on low teens multiple and with significant upside should the turnaround yield return. And our view is that it doesn't require that much effort for investors to generate significant return over the next 6 months. And our view is there's significant return to be made from this company. Now, thank you so much for being investors of 10Cap Alpha Plus, and look forward to catching up with you in person soon.